Good evening, everyone, and thank you for joining us on Greaves Cotton Q1 FY26 earnings conference call. We have with us today Mr. Karan Thapar, Chairman of the Board, Greaves Cotton Limited, Mr. Parag Saputi, as Managing Director and Group CEO, Ms. Akhila Balachandra, CFO, GCL, Mr. Vikas Singh, Managing Director, GEML. We would like to begin the call with brief opening remarks from the management, following which we will have the forum open for an interactive question and answer session. As a reminder, all participant lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Before we start, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the result presentation shared with you earlier. Further, as you are aware, Greaves Electric Mobility Limited has filed a draft red herring prospectus with the capital markets regulator, SEBI, to raise fund to an IPO. All discussion in this call with regards to this entity may be read in conjunction with and be limited to said DRHP. I will now hand the conference over to Ms. Akhila Balachandra. Thank you, and over to you, ma'am.
Good evening, everyone. It's a pleasure to have you all with us today. We will walk you through our financial performance, strategic priorities, and key developments for the quarter. Before we delve into the details of our performance, I'd like to take a moment to welcome Mr. Karan Thapar, our Chairman. I now invite our Chairman, Mr. Thapar, to take over.
Thank you, Akhila. I presume I'm audible?
Yes, sir.
Okay, good. So before we commence discussions on our financial and operating performance, I'd like to introduce and extend a very warm welcome to Vikas Singh, who joins us as the new Managing Director of Greaves Electric Mobility Limited. Vikas will lead the company's next phase of growth with the current management team reporting to him. With over 3 decades of leadership across diverse consumer-driven sectors, Vikas brings a wealth of experience in driving large-scale transformation, digital innovation, and business growth in complex and regulated environments. He has held key leadership positions and roles in both Indian and multinational organizations and has consistently delivered results with resilience and agility. His appointment reaffirms Greaves' commitment to doing the best for GEML, as well its strong belief in the electric mobility space. Under Vikas's leadership, I am confident that GEML and its subsidiaries will get back on the fast growth track once again. Over to you, Vikas.
Thank you, Mr. Thapar, for the warm welcome. I am honored to take on this role at such an exciting time for Greaves Electric Mobility. I look forward to working with the team to build on the strong foundation you've helped create and to drive our vision of accessible and sustainable mobility for all. Thank you again. Over to you, Parag.
Thank you, Vikas. So I am going to start off to give you a business update on Greaves Cotton Limited. So good evening to all of you, ladies and gentlemen. I will cover the key developments and performance of our core businesses, which includes Greaves Engineering, Greaves Retail, and Excel for this just ended first quarter of FY26. During this quarter, we saw a solid momentum across our core businesses. Each of these businesses play a very important role in advancing our mission, which is to provide sustainable, efficient, and inclusive engineering and energy solutions across India. We are very happy with the performance of our largest business, Greaves Engineering, which has delivered another quarter of strong growth. This has been driven by very healthy domestic as well as strong international sales. In Q1 FY26, exports made up 14% of our revenue. This was on the back of very strong demand for our Euro 5 Plus auto engines and our CPCB 4 Plus gensets. We believe this underscores our reputation for reliability and for quality. The automotive segment saw a solid 46% year-on-year growth, largely driven by this international business. Also very encouraging is the growing traction for our engines in the non-auto applications like firefighting, marine, construction, and agriculture. The non-auto segments grew by 19% year-on-year, and within that, the gensets saw a very strong 30% growth. Within the gensets area, we have held our market share at 4%. We remain sharply focused on delivering customer-first solutions. Moving on to Greaves Retail, this business delivered a 5% year-on-year growth. Within this, the non-auto aftermarket segment saw a good growth of 40%, while the auto segment remained flat, mainly due to subdued demand in the markets. Within the non-auto segments, we see a healthy momentum. The railway business is of particular interest and it is progressing well, gaining strong traction. We have also started to get deeper into the electric three-wheeler ecosystem in the L3 space, and we have now onboarded more than 10 e-rickshaw manufacturers for our products. And our efforts in connecting mechanics is also growing strong, with participation from over 21,000 mechanics who have scanned more than 170 million reward points through our unique mechanic loyalty program. To further strengthen this connect throughout the value chain, we have started to pilot also a retailer loyalty program. That was on Greaves Retail. Now moving on to Excel. Excel continues to focus on increasing business with OEMs, which is their core customer group. This has resulted in new wins for both the mechanical and electronic control systems in automotive and construction industry. With the technological advancement in motion control systems, Excel has also launched a hydraulic marine steering system for outboard boats and has received global orders from Europe and the Middle East. Further, leveraging its in-house development capabilities, Excel has won orders in the rubber business with OEMs in the agriculture and the construction equipment industry. Overall, aside from these operational initiatives across the businesses, we also continue our efforts to broad base our presence in more markets globally. We are also driving operational excellence across the businesses through digitized inventory, through integrating our supply chains, and training our partners and dealers to become more customer focused. On the ESG front, we have made good progress on waste reduction and expanded our upskilling initiatives within the mechanic communities. That was on the business update. I'm also aware many of you are keen to understand our roadmap to our financial year 30 vision. Let me tell you that we are in the midst of finalizing our strategy and recalibrating our approach where it is necessary. I would request your patience. Our plan is to share with you more color on our growth plans over our next call post the H1 FY26 results. To conclude, let me reconfirm our core businesses remain solid and growing profitably and are very well aligned with Greaves' broader transformation journey. While we continue to invest in future-ready areas like electric mobility, our core is strong and building on the trust and scale of a wide distribution network. This gives us the stability and resources to drive sustainable growth across the group. With this, I'd like to hand over to Akhila to take us through the financial performance. Over to you.
Thank you, Parag, and once again, good evening to everyone. I'm happy to share that we've commenced financial year FY26 on a very positive note with strong operational and financial performance, delivering steady performance across all our key segments of business. This reflects the successful execution of our transformation strategy, diversification of our portfolio, and a disciplined approach to financial management. It also validates our continued focus on sustainable growth, operational excellence, and capital efficiency. For Q1 FY26, we've reported a consolidated revenue of 745 crores, with standalone revenues growing 22% year-on-year to 541 crore. Standalone EBITDA came in at 76 crore, making a 51% increase year-on-year, and EBITDA margins expanded by 270 basis points, driven by improved product mix, operating leverage, and disciplined cost management. Our engineering businesses recorded revenue of 385 crores in Q1, supported by a continued demand from infrastructure, institutional, and industrial customers. Despite raw material cost fluctuations, we maintain margin stability through operational efficiencies and smart procurement. The business continues to focus on reliability, delivery, and technology-led process optimization. Excel Control Linkage, our strategic acquisition, delivered another quarter of growth with revenues of rupees 60 crores. Both the core and acquired businesses contributed meaningfully to our consolidated top line. Greaves retail business grew to 155 crore in Q1, backed by expansion into Tier 2 and Tier 3 markets and improved store-level economics. Customer experience initiatives, analytics-led merchandising, and integration of the supply chain have driven stronger conversions and better customer lifetime value. We are seeing increased traction from both B2C and B2B customers, validating our efforts to build a resilient spares network. Greaves Electric Mobility continues to scale with Q1 revenues of 137 crores. This business has turned. We are continuing to invest in new platforms, digital-first experience, and ecosystem partnership to strengthen our leadership in the EV space. Our captive NBFC, our EV finance arm, Greaves Finance, which focuses on EV financing, has grown its AUM to 300 plus crore, including co-lending, reflecting a year-on-year scale-up. We have achieved this by and underpinned by strong portfolio quality, prudent risk controls, and tech-enabled origination and underwriting. We are focused on deepening our partnerships with OEM and dealers to broaden financial access, especially for EV customers in underserved markets. We continue to operate with a strong balance sheet. Our consolidated cash reserves stand at 400 crore plus, net of debt, and with a tight control on working capital. Our return on capital employed continues to be healthy, reflecting our disciplined approach to capital deployment. Looking ahead, we remain cautiously optimistic. While we are mindful of external macro and regulatory headwinds, our diversified portfolio and customer-centric approach position us well to navigate the environment and capture emerging opportunities. With this, I invite.
Ladies and gentlemen, thank you for joining us today. I hope you can all hear me. We are audible. Just a quick sound check at our end.
Yes, sir, we can hear you.
Lovely. Thank you. Let me begin with a quick look at the electric two-wheeler industry. We recorded approximately 300,000 units in Q1 FY26, reflecting a 34% year-on-year growth. While slightly down in terms of 2% quarter-on-quarter, the industry is steady and maintaining high concentration in the top 5 states, Maharashtra, Karnataka, Tamil Nadu, Uttar Pradesh, and Madhya Pradesh, contributing to over 56% of the volumes. At Greaves Electric Mobility, our E2W business, electric two-wheeler business, continues to strengthen its position. I'm happy to state we have an 84% year-on-year retail sales growth Our flagship product, Magnus Neo. Excuse me a second. Yeah.
Conference is now being recorded.
Our flagship product, the Magnus Neo, remains a preferred choice in the mid-speed segment, backed by comfort, practicality, and strong after-sales support. The refreshed Rio, which brings in the entry segment, saw a 30% quarter-on-quarter growth, reaffirming relevance in rural and emerging markets. Our market share last year, same time, was 3.4%, and this year it stands at 4.2%, with leadership in Bihar at 15.3% and Tamil Nadu at 13.9%. I'm happy to state we offer an inclusive portfolio spanning products in the price range from rupees 50,000 to almost about 1.5 lakhs, and this covers the slow speed, the mid-speed, and the high-speed segments, thereby catering to a wide range of customers. With this, I move to the three-wheeler segment. The L5 category clocked approximately 167,000 units in quarter one, which is a 12% year-on-year growth. EV penetration in this category has surged upwards to 31%, up from 17% same time last year, driven by better availability and to a certain extent pricing. Apologies for this, everyone. There seems to be some issue in connectivity at our end. Reconfirming again that you can hear me.
Yes, sir, we can hear you.
All right. So I'm repeating again the last few lines. We offer an inclusive portfolio spanning a portfolio from approximately rupees 50,000 to about rupees 1.5 lakhs across the slow speed, mid-speed, and high-speed segments, thereby catering to a wide range of customers. With this, I move to the three-wheeler segment. The L5 category clocked 167,000 units, which is a 12% year-on-year growth. Happy to state that the EV penetration in L5 has surged to 31%, up from 17% last year, driven by better availability and to a certain extent pricing. The L3 market also grew 11% year-on-year, led by UP, Bihar, Assam, and Delhi. Overall, our three-wheeler business is steadily gaining ground. Our OBD2B compliant L5 diesel variant is gaining traction with a 4% market share. We have expanded into CNG options, thereby creating a fuel-agnostic portfolio which meets varied commercial uses. Notably, June saw much better retail sales driven by a refreshed portfolio, better dealer alignment, and focused market interventions. We are also proud to share that our newly launched Ultra City Extra, which is the EV three-wheeler in the L5 space, achieved a national record, traveling 300 plus kilometers on a single charge from Bangalore to Ranipet. This feat reinforces our engineering excellence and our endurance credentials. We are also investing in long-term customer satisfaction. We have expanded our service network to 400 plus touch points. We have ensured a 98% plus service part availability, and we are driving digital transformation via Salesforce, aiming to elevate customer service and engagement. On the operation side, we made meaningful progress with margin improvement through cost optimization, improved channel efficiency, and tighter execution discipline. While we continue to monitor industry headwinds, including the rare earth metal availability, our proactive supply chain planning and localized sourcing gives us confidence in ensuring product availability and, very importantly, festive preparedness. Finally, we are backed by two very strong and committed investors, Greaves Cotton and the ALJ Group, who believe in our vision and our long-term potential. We are truly grateful for their continued support. With that, we'd like to open the floor for any questions you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and one on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and two. Participants are requested to use handsets while asking a question. Kindly note, participants are requested to limit their questions to two questions per participant. Do you have a follow-up question? We request you to rejoin the queue. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Raman KV from Sequence Investments. Please go ahead.
Hello, sir. Hello, sir. Can you hear me?
Yes, sir. You're loud and clear.
Yeah, sir. My first question is with respect to the engine segment. Sir, there has been a good margin expansion YOY as well as quarter-on-quarter, as well as 30% sales growth. So I just want to understand what led for this margin expansion, and is this margin sustainable?
So let me take that. So if I just make sure I understood your question, you said in the engines business, you were happy with the YOY and quarter-on-quarter margin expansion, and what was the reason for it? So within the engine business, like I mentioned in my opening remarks, the auto segment has done well for us this year. And especially if you look within the auto segment, we have started a good export business for our Euro 5 Plus engines, and that obviously has helped us improve our margins.
And sir, the second part of the question was whether this margin is sustainable.
So let me take that. If you go back our results over the last 8 to 12 quarters, we have been consistently improving our margins, and we are working towards maintaining it in the range of 13 to 15%. That has been our constant endeavor, and that is what we will keep aiming to keep on working towards.
Thank you.
Okay, ma'am. And my second and last question is with respect to the volumes. Can you give me the volume figure for engines with respect to auto and non-auto segment, as well as electric mobility?
So we've not given a disclosure on the volumes in this quarter, but they are significantly higher than the quarter one of last year. And on electric mobility, I will ask Vikas to respond to the question.
Thank you, Akhila. I did cover this in my opening remarks. In quarter one, we maintained an 84% year-on-year retail sales growth, which is a very healthy delivery, and we are making all efforts to ensure that we maintain this rate of growth in the quarters ahead. Thank you.
The 84% growth is with respect to the volumes, right?
Retail volumes, yes. This is not the invoiced volumes, the retail volumes.
Okay, sir. Thank you.
Thank you. The next question is from the line of Krishna Pansara from Molecule Ventures. Please go ahead.
Hello. Thank you for giving me this opportunity, and congratulations on a very good set of results. I have three set of questions. First, being on the engineering side, so as we are aware that the Greaves Engines division has grown by 30% in this quarter, which is a very impressive growth. And you have mentioned in your presentation that this was led by predominantly by two things, one being the gensets division and the other is the auto engine. So could you help us understand that exactly which end user industry contributed to, let's say, auto engine division, and then which sectors drove the genset division growth? Like the growth has been very good, but if you can just pinpoint on the end users which drove the growth.
Indeed. I will be happy to answer that question. Like you rightly picked out the two industries where we have seen our growth. In the auto engine, as you know, we are a very strong player in the three-wheeler market. So obviously we have seen good traction there. And along with that, we have also seen our export business grow. Within the genset business, we have seen our our distribution expansion across the country, and to name specific sectors in the residential and the infra construction sectors have given us good growth in this quarter.
Right, right. But so will it not be possible for you to give a volume picture on the auto engine segment?
I think Akhila already mentioned the volume growth that we are ready to disclose, so we don't have any more information on that.
Okay, okay, sure. And sir, my second question is on our EV business. So while I'm aware that, we have filed the DRHP and you might not be able to disclose some very sensitive information, but I would request the management to throw some light on the timeline of the IPO. I wanted to understand, is there demand in the market for us to successfully launch this IPO? Because as investors of Greaves Cotton, it is also very crucial for us that, markets start seeing and valuing both our businesses separately. And more so now because I feel that our engineering business seems to have begun a good growth trajectory given what numbers we have clocked in Q1, which are very much comparable to Q4. So that has grown very well. So if you can throw some light on the timeline of the IPO and some details.
So thank you for your question regarding the IPO of GEML. As you are aware, the company has filed its DRHP with SEBI, and SEBI has issued its final observations. This marks a key milestone in the regulatory process for us. While the IPO process is underway, we remain focused on delivering strong business performance. The actual IPO launch, however, will be subject to prevailing market conditions, internal preparedness, and other strategic considerations. We would like to reiterate that we remain committed to creating long-term value for everyone and will keep the markets informed in compliance with all regulatory requirements. I hope that addresses your question. Thank you.
Okay, sure. Just one related question to this, sir. In yesterday's AGM...
Sorry to interrupt, ma'am.
We just have one related question to the previous question I asked, and then I'll join back with you.
Okay,
Yeah.
go ahead.
In yesterday's AGM, the chairman, sir, mentioned that, Abdul Jamil wants to reduce the stake down to 20%, which is currently 36%. So I wanted to understand our perspective as well on the IPO. So how are we looking at our investment in the EV business? I'm aware that we will still be the promoters of the EV company, but what is your take on the ownership aspect post the fresh issue and the OFS? Thank you.
So thanks for that question. And
let me take that question because
sure, sir.
a common factor in both, but I think I don't understand the implications of the question, I'm afraid. The DRHP was very clear on both Greaves Cotton's position regarding its shareholding as well as ALJ. And I think I said in my speech that ALJ did not want to be a promoter post a public listing. So not being a promoter, they are forced to dilute to a certain level, which is what is represented in the DRHP. I don't know if that answers your question.
Yeah, thank you. I'll join back with you.
Okay.
Thank you. The next question is from the line of Shubham Jain from NV Alpha Fund. Please go ahead.
Hi, thank you for the opportunity, and I hope I'm audible.
Yes,
I had a
sir.
couple of questions regarding the engine business. Following up on the previous participant's question, I think this is the first time where our exports contribution has gone up to 14% as a percentage of the engineering sort of engines business. Just wanted to understand, what's working for us in the exports business, and is this now like an inflection point for us to start growing? Because over the last few years, we've gone from a 50 to 70 crore run rate to almost 200 crore run rate in exports in the last couple of years. So just wanted to understand a little more, what sectors or what units are doing well for us.
Thank you for your question.
So within the exports, especially for this quarter, we have seen two areas which have done well for us, and I mentioned those already in my opening statement. One is the automotive sector, where our Euro 5 plus engines, which were under development with a partner, have now been commercialized. So that's why we saw some good invoicing numbers this quarter. And secondly, also our PPCB 4 plus gensets, which we have been exporting, saw some good numbers in this quarter.
Got it. So just a follow-up on this, is there because of the Euro sort of transmission change of emission norms, the transition from, say, Euro 4 to Euro 5 or 6, right? Is that why we're seeing like a surge, or, this is more structural in terms of us gaining market share in exports? How should one look at it from an export perspective?
So most of the auto businesses that we are in, as I'm sure you're aware, are some partnerships that we have with our customers. So we work together to develop the technology to make sure our engines fit their vehicles. So obviously these are strategic businesses that we start.
Right. Understood.
And obviously,
understood. So this.
Please.
Sorry, yeah, please go ahead.
No, my point was that you mentioned the upgrade of the emission norms, and in this case, Greaves was proactive, and we were able to work with our customers to develop Euro 5 plus engines, which is where we are seeing the success now.
Got it. So is it fair to assume that given this transition, we'll be able to gain more market share in the next generation of norms, and this starts to become the base for us to grow from going forward?
What I can say on this is we will continue to make the efforts to work closely with our customers as we have done in the recent past.
Understood. Thank you. My second question was on the genset piece of the business. In the last couple of years, we've seen our market share go up from 2.7% to 4%. And we seem to be growing in this space, even though the industry doesn't grow at the same pace. What's helping us, gain this market share and grow at this base? And, how big can this business become for us? Is it more distribution-led? Is our product more differentiated? What's helping us gain this market share? If you could help us understand that a little bit, it would be great.
Sure. I can comment on what has helped us achieve the market shares that you have seen. So it's not any one thing. We have been working on multiple fronts. First and foremost, we have been working to ensure our product quality is upgraded and continues to develop. Secondly, we have also worked hard to improve our customer service. As you know, this is a product which depends on after-sales service. So we have in concerted efforts to improve our response to our customers. And thirdly, we have also broadened our distribution network and coverage. So all these three things have been very important to help us steadily improve our market share in this segment.
Got it. And if you could help us understand, how big, given our current distribution, this business can be for us?
So it remains a focus for us as it has in the last few quarters. So we will continue to put this emphasis that you have seen so far.
Sure. I will get back in the queue because I have more questions. Thank you.
Thank you very much.
Thank you. The next question is from the line of Jyoti Singh from Arihant Capital Markets. Please go ahead.
Thank you for the opportunity and congratulations on the good execution side. So basically, sir, I wanted to understand on the inventory side how much we are maintaining currently, and follow up on the earlier response on the increasing market share for the product quality and increasing distribution. So just wanted to highlight more deeper, how many dealership we have increased for the EV side. And on the another question on the EV side, that how the market share is evolving in the key state like Tamil Nadu and Bihar area, and also on the West and North India. Then I will ask a few questions more.
Yeah, thank you for the question. I would just like to state that the team is completely focused on building fundamentals, both in terms of network expansion and also in terms of product portfolio and our general efficiencies as a business. The results are coming in well. We would continue to build on them in line in a manner which is productive and impactful without spreading ourselves too thin. As regards market share, I did mention this in my opening comments. We've had an improvement in market share with the same time last year. This applies across most of our markets, and our attempts will remain to build on this success of ours in the quarters ahead. I hope this addresses your questions. Thank you.
Yes, yes. So thank you, sir. And also, can you quantify the contribution from export and the EBITDA differential versus domestic business? And last question on the lot of restructuring and change on the management side. So just wanted your comment.
On this export, I presume you're talking about our engineering business?
Yes, sir.
Could you please repeat your question on export, please?
So just wanted to understand on the EBITDA differential and versus the domestic business.
So obviously, we have seen our export business grow, and it has helped our margins. The actual difference in EBITDA is not an information that we would like to discuss in this forum.
Okay, thank you.
Thank you. The next question is from the line of Sonal Mihas from Precedent Capital. Please go ahead.
Hi, sir. This is Sonal Mihas. I hope I'm audible.
Yes, sir, you're audible.
So my first question was with regard to, I think, what the previous participant was alluding to. There have been frequent changes in the leadership. As a investor, shareholder who's been there for a while in the company, wanted to understand going forward, are there more leadership changes that we expect, or the team is settled? Just wanted kind of a subjective guidance around this.
So let me take this question, and then I'm going to also So yeah, I have joined this company 3 months ago, and this is my second call. What I can confirm to you, I find the business very exciting, and I've had a very good interaction with our customers and our teams, who you can see have executed a very strong quarter. So I think this is a good start, and I'd like to leave it at that for the moment.
Yeah, I'll just add on to what Parag said. Every organization would like a stable leadership team, and Greaves is no exception to that. However, there are times when, for reasons beyond your control, you do have an element of churn. I think what's important is for the organization to staff with profiles who are strong, bring in diverse experience, and are able to build the team for the next phase of the journey. And we'd like to believe that the organization, as a group per se, is well positioned in that direction, and there should be no concerns for our investors going forward. Thank you.
Understand that. So my second question was more a clarificatory question. In your deck on slide 12, I see the e-mobility business has grown by 7% YOY in sales, and there is this, and when I move to slide number, the first slide on Greaves Electric Mobility, where it says that retail sales increased by 84% year-on-year. So should we assume that the volume sales for electric mobility combined is also around 7-8%?
So let me clarify that again, and I did mention that to one of the previous questions which came in the past, that the number that we mentioned on 84% growth is retail sales. However, the invoiced volume, which is the Vahan number, is what you're referring to, and that number is correct, which basically means that the extent of pipelining which was there in the market has been reduced significantly. This is part of to try and build a more efficient business, not only for our investors and ourselves, but very importantly for our dealer and network partners and our vendors. We would be further optimizing our business as we go along and move into a more demand-driven model, which will ensure much better margins also as we move forward. Thank you.
So the retail sale needs.
Sir, I just request you to rejoin the queue for the follow-up question.
This is a clarificatory question for that previous question, ma'am.
Okay, go ahead.
Yeah, I'm just inquiring. The retail sales precedes the Vahan sales numbers by 2 or 3 months. Is that correct?
It's not a question of preceding Vahan sales number. There is a registration number and there is a retail placement. There is a lag between the two, and it is not always in sync. It's difficult to give you an exact number on that account, but by and large, it catches up at a point in time.
Got it. All right. Thank you, sir. I'll fall back into queue.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants in the conference, please limit your question to 2 questions per participant. Do you have a follow-up question? We request you to rejoin the queue. The next question is from the line of Khush Shah from B&K Securities. Please go ahead.
Yeah, thank you, sir, for the opportunity and congratulations on a good set of numbers. I just had a couple of questions. On the financial side, we see that on a consolidated basis, the margins have jumped to 7.6%, and that's mainly driven by the RM basket. So could you just throw some light on that, like what's driving this significant drop?
Sorry, can you repeat the question, please?
So on a console level, I'm seeing that the margins have increased to 7.6%, and that's also driven by the RM basket dropping by around 250 bits year on year. So what has driven this drop in the RM basket? If you could just clarify on that.
Oh. So this is on the console or on the standalone?
On the console. And on the standalone also, I see some around 230 bits drop.
So if you see, we have, and I go back again, the last 7-8 quarters, we have been consistently improving our RM cost, and it has been consistently coming down, and our EBITDA, and that has been flowing into our EBITDA margins. At a standalone, it has been very visible, and we are currently EBITDA in the range of 13 to 15%, right? This has been a consistent effort going on in the electric mobility division. To go through our results this quarter, at a PAT level, we are actually profitable even at a consolidated level with a PAT of approximately 20 crores. So this has been an overall drive, as Vikas mentioned, improving their own performance, improving their supply chain, improving their cost mix, and same thing being done in the GCL standalone side. I think all this has translated into a consolidated, very strong performance.
Thanks for the clarification. With regards to this, you all have done some partnership with Chara Technologies, right? So has that also contributed to the significant improvement in cost?
So the Chara Technologies announcement, which we announced a few weeks ago, it's a very important technological partnership for us. But the technology and the work we are doing with them still is at a development and incubation stage. So for this quarter, we have not seen the commercial impact of that partnership.
Understood. All right. And just one last question on the export front, the one which contributed around 14% for this quarter. To which geographies will you all mainly be exposed to? I believe in the presentation it's US, Africa, and Middle East. So what would be the number if you could give something on that?
Our exports, and that's one of the strong points, a good spread across multiple geographies. Our focus areas continue to be Middle East, Europe, and also North America. So we have no over-dependence on any one area.
Understood. All right. Thank you. That's it from me.
Thank you. The next question is from the line of Suvan Mittal from MFC. Please go ahead.
Hello. Hello, sir. Thank you for the opportunity. I have mainly two questions lined up. The first being for our engine business. I was wanting to understand, does the genset sales occupy a sizable portion of the non-automotive business? So as per the last quarter, we followed a mix of 65 to 35 compared to the auto to the non-auto. So the non-auto business, does the genset business occupy upwards of 50% of the business or less than 50%? If you would give some color.
So the non-auto business primarily consists of gensets. It also includes other industrial engines, firefighting pump sets, marine engines. But predominantly, you're right, it is comprising of the gensets.
Okay. And then my second question being, for the Excel business of control levers, like in the past 4 quarters, the EBITDA margin has been dropping down from 35 to 26%. So is it because we are scaling up very rapidly in that, hence that upwards of 30% EBITDA margin is not sustainable? Or can we expect in the coming quarters of 1-2 years for the EBITDA margin to catch up in the control system business?
So essentially, you're right. If I go back to Q1 FY24, we had a performance of 36.6% EBITDA margin. And this quarter, we are at 26%. What I would like to say there is that we are diversifying that business and strengthening a lot of our internal processes. We are investing some monies into the business, and therefore, this is currently a catch-up stage, I would say. And going forward, maybe in the next 3 to 4 quarters, we should see traction of those work that we are currently doing.
Okay, so just to this, we should see an upward trajectory, right? Post 3-4 quarters.
Yes, both in terms of revenue and in terms of the margins.
Okay. Thank you, ma'am.
Thank you. The next question is from the line of Dharvi Sharma from Mudita Growth Partners. Please go ahead. Ma'am, your voice is not audible.
Hello, can you hear me?
Yeah, go ahead.
Yeah. So congratulations on a good set of numbers. My first question is on the retail segment. So sir, could you help us understand the factors that might be restraining our growth here? What has the market response been to our multi-brand spares? And additionally, any new initiatives that we are launching to achieve the previously communicated target of this segment being 5x?
Yeah, so I mentioned in my opening remarks that within the retail segment, the largest piece being our auto aftermarket, continues to see some headwind. As we all know, the main sector that we service with that, which is the diesel three-wheelers, the park of diesel three-wheelers continues to remain flat or decline. So as a consequence of that, there are some headwinds, and that, of course, has played out in the numbers. I'm glad to see that despite that, we have seen a 5% overall increase in the retail business. What I also pointed out is that we have a few quarters ago started putting in efforts on diversifying that business. And we are starting to see the early results of that. And during this quarter, we have seen the non-auto spares and aftermarket business see a growth. And this is in the sector of course, the aftermarket of our gensets, as well as I pointed out the railway sector, where we have seen good traction. And we will continue with these efforts to try and diversify the impact of the reducing diesel park.
Thank you, sir. So my next question is that the management earlier mentioned about their plans to leverage its existing machining capabilities. And we also understand that one of your Shindra plants had received certification to supply aerospace components. If you could throw some light on what specific aerospace components you are targeting and what has the progress been in that segment since the certification?
I believe you're referring to one of the comments we made in the past earnings calls. And yes, we have identified in the past the aerospace and defense segments as focus areas. And we are building our internal capabilities and the Shendra plant certification was an important step in that. Also, our Excel business unit is the tier 2 supplier into the aerospace segment. So these are still early days. At this current moment, we are focusing on building the capabilities and the quality levels and the technology that is needed to be successful in those segments. So there is no significant commercial development to report at this point.
Okay, sir. So lastly, could you throw some light on the status of the 100 crore capex that we were doing in Excel?
So we continue to watch our growth across business sectors very closely, and strategy and policy to scale up our capacity and our investments in capacity in a modular way. And we are well prepared. We keep a close watch also on the Excel situation. And as and when we see the need for adding capacity, we have the plans ready and we have the resources available. Like Akhila said, we have a strong balance sheet. So the management remains committed to continue to increase our capacity in a modular fashion.
Okay, got it. I'll join back the queue.
Thank you. The next question is from the line of Harmanpreet Singh, an individual investor. Please go ahead.
Hello. Hello.
Yes, sir. Go with the question, please.
Sir, actually, I want to know the status of diesel engines, like we are moving to electric and CNGs. So what is current share of diesel engine and how we look at that?
Thank you for your question, Ji. As we have said in the last few quarters, we have a fuel agnostic strategy, which means that we will continue to work with our customers for the diesel engines because it's still a large portion of our life day to day, as you well know. But we have also, over the last few years, worked to develop different prime movers. So we have a full program of CNG engines. We have also invested in electric powertrain. And as we have been speaking, we have a division which does electric scooters and electric three-wheelers. So as a company, we feel that we have taken the right strategy, being fuel agnostic and being able to support our customers through their transition journey.
So, sir, could you tell me what will be the prime mover of our company in the coming years if we have to choose one?
That's the point. I think we don't believe that we have to choose one. We believe it's advantageous to be fuel agnostic. And overall, we believe that there will be multiple fuels and multiple prime movers forward in this industry.
That's good, sir. Sir, last question.
I'm sorry to interrupt, sir.
Okay. Thank you.
Yeah, thank you so much. The next question is from the line of Shubham Jain from NB Alpha Fund. Please go ahead.
Thank you for the follow-up. I had a question on Excel. While we looked at the numbers and it's a fantastic acquisition, it's been fairly steady till now. And you mentioned about certain order wins. How should one look at this part of the business? How are we looking at scaling it? Are we looking to add more products? You mentioned a sort of steering column product that we've added. But just wanted to understand a little more about this business and how we're looking at growth over here.
Okay. Thank you for your question and also for coming back. I appreciate your engagement with our business. Like I said in my opening statement, I know many of you are keen to understand the forward-looking strategies, and I would request for your patience just for a little while more. We are in the final stage of deciding our strategy, and we will be able to come to you with these kind of details during our next call.
Understood. So I had another question on Greaves Retail also. How should one look at growth? Is it more product enhancement? But I'm guessing, is this also should wait for a quarter to understand? Okay.
I need to answer the same.
No, done. Thank you so much.
Thank you.
Thank you. The next question is from the line of Krishna Kansara from Molecule Ventures. Please go ahead.
Thank you for giving me another chance. My question is on Excel, somewhat similar to what previous participant also asked. So we have seen a slight slowdown in growth in Excel control engage. So is it because our capacity utilization has now already reached above 80% and we will need new capacities to grow further? And if that is the case, when are we targeting to commission our new capacity in case of Excel? If you can just throw some light on the CapEx part of it. And
Right.
another question. Yeah, sorry.
So I can make a comment and give you throw some more light on this quarter's performance, which has been, the growth has not been as strong as we would have liked. And there's actually a reason for that is one of our large customers in one of the export markets is recalibrating their inventory levels. So we have had a temporary hit of that in this quarter. As regards the capacity, I think I already answered one of the previous analysts that we watch the capacity utilization very closely. At this point, it is not acting as a hindrance to our growth at all in Excel or in any other part of the business. But we remain committed to growing and investing in the business in a modular fashion and in a financially prudent way.
Right. Sure. And so just one last question. We are seeing a long-term debt of 60 crores in our consolidated balance sheet. So in which subsidiary have we taken this debt and what has been the reason for that?
So we have taken an external debt in Greaves Electric Mobility. This is to partly fund their expansion plans till the IPO.
Okay. Thank you.
Thank you. The next question is from the line of Amit Kumar from Determined. Please go ahead.
Yeah, thank you so much for the opportunity. So it's a determined investment. Just one question again on your mobility electric business. So at this point of time, from a macro perspective, when we sort of look at it, just about 1.5 million two-wheelers sort of sold across India out of total 20 million. So just about a 7-8% penetration. I mean, we were hoping that the kind of 50-100% growth rates that we have seen in the past would sort of continue given the very low level of penetration. But growth has really sort of slowed down at an industry level itself. It has slowed down to just like teens basically. So any reason you would sort of attribute to this?
Well, as an industry starts increasing in penetration, you would see a corresponding impact in growth rates. However, the compounded growth rate that the industry is bringing in is ranging from 20 to 25%, which is a very healthy growth number actually in today's context. We don't see any reason for concern over here.
So 20-25% growth at the industry level is okay for you?
I think that's what I said, yes. Thank you.
All right. Done. Thank you. Thank you so much.
Thank you. Ladies and gentlemen, as that was the last question for the day, I now hand the conference over to the management for closing comments. Over to you, sir.
Thank you very much. I appreciate all of you for joining us today. We appreciate your trust and your ongoing confidence in our journey. We remain committed to delivering a strong performance and are excited about the opportunities ahead. On behalf of the management team, I'd like to thank everyone once again for the time and your continued engagement. Thank you.
Thank you. On behalf of Greaves Cotton Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.